Okay, yeah, you're right. You're right. Finance Friday. Okay, should we look at a couple of cringy finance tips real quick to wrap up? Is that what we should do? Okay, there's this one. I haven't seen this one. I don't know what he says, so buckle up. It could be brilliant. It could be really stupid. Let's see. Let's see.
People that say it's a quarter till this time, that shit has always angered me.
Why? That's some of those.
Okay, what's I didn't learn this till this year. A quarter doesn't mean 25 minutes. It's a quarter past 9, 9:25.
Completely wrong.
That's not. Oh my God. Okay. Well,
completely wrong.
What is so? It's 15.
Correct.
What? Tell me how does that make sense? Explain that to me.
Because
dude is getting like all riled up. He's very confident. He's got a good point here. Oh no. Oh, this hurts. But where does Todd Howard fit into this? That's a great question, Sammy. That's a great question. If I ever meet Todd, it's going to be the ultimate crossover, I swear. Well, like, this is one of those things where somebody gets really riled up and is like, I don't know. You could tell he was in the shower this morning and thought of this and was like, yeah, that's a really good point. 25 cents is a quarter, but for an hour, it's only 15 minutes. That's stupid. Like, he's just never heard of fractions.
a quarter, you're thinking straight to currency.
Yes.
A quarter is a fourth. That's all a quarter is.
Well, okay.
A quarter is a fourth of anything. It's a fourth of anything. Don't think of the actual.
I don't understand that.
A fourth.
Oh my God. It's almost for a moment. It looked as if he was thinking, but then he shut it down. He's like, nope, can't have that.
I don't understand that.
A fourth. A quarter of 10 is 2.5.
2.5, 25. Where is this 15 coming? Yeah, where's 15 coming from?
60. An hour is 60 minutes. So
Okay.
if you break it into fourths, a quarter
25,
is 15.
50. When did we start speaking in currency? Like, when I say it's $1.30 until 18, what am I supposed to like? What is?
This guy, I don't know for a fact. This guy probably graduated from high school. Like, this is one of those people, like, these people are out there, okay? Just remember that. Remember that. These people are real.
It's $1.30 till noon. Who are we?
It's $1.30 till 18. If you fused currency and military time, people are gonna think you just walked out of a spaceship.
That one hurts. That one hurts. Average Twitter user right there. And TikTok user, I guess. Oh, this was funny. This was funny. So this guy posted this, okay? And he was very proud of it. He said, watch me make $6,000 trading SPY today in the last 12 minutes of the market. I waited patiently for a setup all day. So this is one of those guys that's like selling a training course and you pay $600 and he'll teach you how to get rich or whatever. Which, to be clear, if you ever have something like that, like, you just don't buy it. Just don't. If he had a way to make all that money, he would not be sharing it for $600. He'd be going to a hedge fund and selling that information for billions, but you know, whatever. Sure, he's probably on Twitter doing it. But somebody noticed in the video he posted, they zoomed in close and they spotted something, specifically the account number and the description of it. This is what's called a Top Step evaluation account, which is basically a practice account that you can use to tweak settings and just hypothetically see how a strategy could have worked if you were to have done it back then. It's kind of like a back test, you know, it's just a back test. And this guy tried to frame it as though he made $6,000, so you should believe me and all my finance advice, when it's all just totally faked. But this is the problem, is like, people will post this stuff on TikTok and people don't realize any better, and so they'll just buy into it and they'll buy his course because they want to be rich and they're a high school and they just believe it, and they get themselves screwed very quickly. Mr. Book. A quarter is 25, right? Yeah, a quarter is 25 past an hour, 18 cents past $1.30. Yeah, exactly. Thank you for the super chat, my friend. That's very generous. Oh, it hurts. Oh no. Okay, this is Grant Cordone. Have any of you guys ever heard of the 10X book? So he's basically like not quite like a Jordan Belfort type, but he's a salesman and he's a guy that is like a motivational speaker at the same time, but he had like a book and he has a training program and all this that's based around 10Xing your money, your lifestyle, all that stuff. Most people who know what they're talking about tend to agree that he doesn't know what he's talking about. He's had things where he's described his like tax strategies where he's like, yeah, I walked in there on December 31st, I bought a Rolls Royce and then I drove it. The next day I returned it, but I got to write it off for my taxes. It's like, for one, you returned it. So technically the transaction is null and void. But even if you did spend the money and you didn't get the refund until the next taxable year, it would still show as an expense in the previous year and then an income in the following year. So you'd still be like, in terms of taxes, it would even out. Nothing would happen. It wouldn't go anywhere. But he thinks he's like really smart and profound when he describes these things, which like, this is a very basic bare bones level of how taxes work in the US. So he is very, very wealthy, but it seems like it's because he's a good salesman and he's good at convincing people he knows what he's talking about. And it's only recently he's been debunked so much that he's kind of turned into a laughing stock. But this is described as a very hard watch. So let's see.
Hey, I'm coming to San Antonio, man. Will you give me 5 minutes? This is before anybody knew who I was, right? No books, no kind of notoriety.
Oh,
So-
Jordan Belfort. I didn't even realize that's who it is. So that's the Wolf of Wall Street. If you don't know, this guy, the Leonardo DiCaprio movie is based on this guy. Sell me a pen. That's him. This is him.
Notoriety. So they're like, no, don't come by. But see, that was interest. To me, that's interest. No, I'm not interested. Not interested.
So not interested to you is interest.
Well, it is. It says not interested.
Oh my God. Okay.
Not is an adjective to describe interest,
Okay.
right? So it's a level of interest.
So if someone says they're not
I have,
interested,
on a
then
scale from 0 to 10, what interest level do you have? None. That is a level.
right?
I will give Jordan Belfort credit. I don't know if it's this podcast. I did see one like a year or two ago where Jordan Belfort had Grant Cordone on and he was like, you're not like a salesman though. You just love money. It's like, and that's okay. I love money too. But he's like, you're not a salesman. You don't love the game of sales. You just love the game of money. And I think like he's right. He'll call people out. Like he is a good salesman, but he is very schmarmy. He's very schmoozy. He's very, very pushy, but that's how he made his millions. I mean, he was very successful because he was good at that stuff. But Grant Cardone is not like that. Grant Cardone just, as you can hear, he's like, yeah, but not interest is a level of interest. Like that's supposed to be profound, but it doesn't mean anything. You're just saying, yeah, she's not interested. No, that means she's interested, bro. Yeah, like stalker logic right here.
Okay, and then 1, 2, 3, 4, 5. You with me? A few minutes ago, he didn't know he had no interest. At least I'm on. You see what I'm saying? You get it?
Well, I wouldn't do that. I disagree with that. But I'm not saying reasonable minds could differ.
Hey, I'm
Yeah. So, but this is why I like Jordan at the very least, because he can hear that and just go, no, I don't agree with that. I think that's bad. If somebody says they're not interested, I wouldn't pursue it. So no, just some casual fraud. Bankruptcy is low-key lit. I used credit cards to go on luxury vacations, plural, after I got disbarred from being a lawyer. $35,000 in debt, and all I had to do was file some paperwork to make it go away. Dave Ramsey would be proud. I'm debt-free now. I mean, he's probably also half joking. But if you knowingly are taking out debt, like there's a thing that'll happen in bankruptcy hearings where the judge will ask you, at what point did you realize you were insolvent? At what point did you realize you were broke? And how much money, what did you buy? Like how much money did you spend? What did you buy after that point? And if they can demonstrate and prove that you knew you were insolvent and broke and then continued to spend money after that, none of that debt can be voided out. That will carry with you. They won't grant those bankruptcy in those cases. So that's just not how that works. Some people got really lucky during COVID because COVID, they just started granting pretty much any bankruptcy that would come along. Like famously, or maybe not so famously, DSP, had to bring him up. He got his bankruptcy granted in the middle of COVID is my understanding. And based on what I've heard with that whole situation, that bankruptcy should not have been granted because he was claiming $5,000 a month in business expenses as a stay-at-home streamer who doesn't play anything with microtransactions on stream. So it seems what's happening is that he was writing off microtransactions from mobile games he was playing as business expenses, which he didn't use in the operation of the business, which is also known as tax fraud. So if he ever tries to do it again, he is going to be in some serious trouble for sure. This guy has a course. He seems like he knows what he's doing. Let's see what he says.
I spent the last $7,500 I had in my bank account to hire one of my first mentors. And that literally left me with no cash, so I got a tattoo of a boat burning on fire right after I made that investment. This was to signify that I was burning the ships and there was no way back. After I bought the course, I spent the next 14 days doing 12 to 14 hours per day of studying the course and taking action so that I could grow my business. 2 weeks after I spent every dollar I had in my bank to hire the mentor, I made my first $5,000 sale. Then I went out and I got a phoenix tattoo emerging from the ashes of the flame to signify the fact that once I burned the ships, I was able to emerge as a new beast. Take this video as a sign that it's time to start going all in.
Yeah. In other words, please buy my course. This is the same like logic that those like old school prosperity gospel preachers would say and do. Like, what was his name? So this guy was a big head honcho prosperity gospel preacher in, I believe, the 80s. Made like hundreds of millions of dollars, okay? Freakishly successful. And he had the same logic where it's like, you need to go all in with God and make a vow. So he said, if you have a savings account, spend all your money. And in this like context of the guy from TikTok investors, he's like, yeah, you got to go all in, put all your money into my course and into my training, and then that will somehow generate profits for you. You'll somehow find success from there. But this guy would do the same thing where he's like, yeah, put it all in, and then God will give you money on the back end. It's the same scammer logic that they do to try and take advantage of people.
Pregnant with miracles inside of me. I've learned not to operate in my name, but Jesus' name. I've learned not to operate in my strength, but his strength. I've learned not to operate in my health, but his health. And I've learned not to operate in my riches, but his riches. Glory, I know how to fish. See, I'm not on this program telling you.
Oh, this one.
That's a word. As surely as I'm speaking by the Spirit of God, that is a word for a person right now. That is God penetrating your heart. It's burning on the inside of you, and you need to make a vow of faith of $1,000. Oh, Bob, couldn't you say 25? No! You can't make a $1,000 vow of faith. I'm saying in faith.
And this guy's framing it as, yes, and you need to make a vow of faith, investing into your financial future. Burn your bridges. He's straight up arguing that, like, yeah, I found success because I spent my last few dollars. I spent all the money I had hiring a mentor. And maybe for him it did work. Maybe, he did find success that way. But 99% of people are not going to find success that way. And that's a very bad idea. Oh, no. Oh, this one looks scary. Okay, what's this one?
Extra money. I've started selling trade lines on my credit cards. I'm using this site. This isn't sponsored. I just want to point out that they're like legit. And so essentially what this is, if a person has bad credit, but they know that they need to get a mortgage or a car loan or something, they pay money to this website. This website matches them up with me based on what they're looking for. And I add them as an authorized user to my credit card for a set amount of time. They don't physically get any sort of card. They don't get my name. They don't have my information. I have all of their information. But the thing is, because they're an authorized user, they get my credit history, and that raises their credit score. They get a better interest rate on whatever loan they're trying to get. And I would not be doing this if I didn't know multiple people in person who had also done this and like said it was legit, because it seems so sketchy. I gave this website my banking information so that they can direct deposit me money. And the amount you get paid depends on your credit limit, the length the card has been open, various things. And so the ones I have ranges from $40 to $80, which might not sound like much, but if I get $40 and it took me 5 minutes to add an authorized user on my credit card, that's worth it for me.
Oh, wow. Okay, so what she's describing is adding some random person that pays this website money as an authorized user, and then that person, because they're now an authorized user on the credit account, they will then have that account listed on their credit report, and they could, in theory, benefit from that. So like, say you have $100 like 10,000, let's just say $10,000 in credit card debt, and you have one credit card with that maxed out, that's what you've got. So on your credit report, if it was run today, you'd have 100% credit utilization. Your account isn't very old. It's like a year old. You maxed it out. You haven't made payments. All the payments are late, all that stuff. If you went through this service, you could get added as an authorized user on a bunch of other accounts. So instead of it showing $10,000, 100% credit utilization, you could have like $200,000 or $1 million worth of credit available to you and only $10,000 maxed out, which looks way better and doesn't look like you're as irresponsible. So you'd be more likely to get approved for the loan. The reason this doesn't make any sense is because like this is super illegal. This is fraud, probably classified as wire fraud. Wire fraud is one of those weird charges that can fit into many random little spots and gray areas, but nobody's going to argue that this is legit or that this would be or should be allowed, because you're lying. Not only is this person facilitating fraud and is helping this person lie knowingly, and they're being compensated for it, but also the person that paid the website to do this is trying to deceive the lender into thinking that they are more capable of handling a higher amount of debt or better rates or whatever. And so they also are knowingly committing fraud. It doesn't work. Yeah, straight to jail. You undercooked chicken, straight to jail. Yeah, that's basically what this is. This is unbelievable. I mean, the fact that anybody would do this is horrifying. And she says that she's doing it for $40 to $80. Like $40 to $80 to commit wire fraud is unbelievable. That's crazy. That one just hurts. That one just really hurts. Okay. And then let's watch one last one to see this guy show us the way. The account is CEO Cells _ Already with this haircut, I'm not convinced this is real, but let's see.
Rent a home or buy a home? Which one should you do? Buying a home, you're paying off your own equity every month. Renting a home, you're paying off someone's mortgage. And then you could take out that initial equity, buy another home, and now you have 2 homes. Or I guess you could just rent for the rest of your life.
Okay. Oh my God. Okay. There's so many little things wrong with this that just show you that he doesn't have any idea what he's talking about. He's just echoing things that he's heard from other people. Buying a home, you're paying off your own equity every month. You're not paying off equity. You don't pay off equity. You would technically pay off a liability to gain equity. So if you're paying off your equity, you're doing something very wrong. So for one, that doesn't make any sense at all. Renting a home, you're paying off someone's mortgage. Maybe that's possible. So I'd say that's probably fair. If you're renting a house that somebody owns through a traditional mortgage, then yeah, your rent payment's going towards paying somebody else's mortgage. And then you could take all that equity or initial equity. I don't see how these follow, but he's like, okay, so you're paying off your own mortgage, gaining equity is probably what he means. And then you could take that equity that you got by paying it off and buy another home. And now you have 2 homes, which he does by holding up 4 fingers. 2 homes. But I don't think he's being real. I don't think this is real. But I mean, you can technically refinance. So the great thing about refinancing debt is that you can take it out tax-free. So if I refinance my home today and I take out 50 grand or 100 grand, whatever, I don't have to pay income taxes on that because it's being taken out under interest for a loan. It would be the same thing like if you took out it wouldn't make sense for you to take out a mortgage on a house and then have to pay interest on that. That wouldn't make any sense. With all that, like you could technically use it to get another house if you're allowed, but everybody just assumes that'll work. But it's not a given. Like the bank will still require you to fit under certain loan to value ratios. It'll still require you to have certain income levels. So it's not like you can just not work a job and then just keep refinancing out of homes and buying new ones. It doesn't work like that. Like a bank is not going to give you a loan if they don't think you can reasonably pay for the next one. Because why would they? It wouldn't make any sense. And this is the most bare bones. Like I watched a TikTok video on how to build a financial portfolio type of thing I've ever seen. Like it's just so bare bones. It doesn't have any substance. And the fact that he's getting something as like wrong as simple as paying off equity makes me think that he really just has no idea what he's doing or saying. He's just echoing what he's heard other people say. Oh no. Okay, I know I said that was the last one.
Right?
Whenever I see a crypto bro, I can't resist.
So y'all seen my video yesterday, right? This was at $100. It has gone up $67 in 24 hours. Actually, oh, hold on. Today's return, $64. Total return, $111. That's in 4 days. I invested in this 4 days ago, and it's, yes! Do not believe anybody. Everybody doubted Dogecoin and thought it wasn't going to amount to anything, and now look at it, almost 20 cents. Whoa. This, 3.8 million. Get it now before it goes up more. It is constantly, steadily going up. Do not listen to these people saying it ain't going nowhere. It's going. It's happening now. $60 overnight. Thought y'all said it won't go do nothing.
It honestly is heartbreaking. He should quit his day job. It's honestly heartbreaking because like these kids are told or convince themselves that, okay, you had a 61% return on $100 balance. The reason these are considered extremely volatile assets is because they're extremely volatile. So they go up and they go down a lot. And in terms of crypto itself, it's a speculative asset. So it's not even something that is backed up by any sort of financial instrument. It's just a thing that people agree is worth a certain amount. And that's the only reason it's worth anything. Me in 2025, after I make $10 million from Shiba because I invested $1,000 every week into it in 2024. Up 98% right now. For the first time in 4 years, you have a chance to get filthy rich. Laugh now or laugh to the bank. Hashtag crypto. And this is just the unfortunate thing is some of these guys, like they did get lucky. And technically this is the thing, like when you're gambling, you can get lucky. There are ways, or there are occasions where people make a bet and get lucky. It's rare, but it can happen. But when you're looking at somebody who is making bets and gambling and there's a winner, it's really easy to ignore all the losers, all the people that lost collectively millions and millions of dollars in the crypto crashes of the last few years. Like, it's just tragic. I bought Nvidia stock 10 years ago and I'm a billionaire now. Holla! You know, Dylan, I think the only way for us to believe you is if you were to like send through like $1 million super chat or something. I think then we'd all believe you. But I mean, until then, I don't know if the chat will believe you. Oh, that's funny. Hey, I don't know anything about investing in stocks, but would you recommend me investing in Take-Two before GTA 6's release, or should I rather put it into the Becky ETD? I mean, the thing with all of this, like I saw somebody that was saying on one of our previous videos, they were like, oh, you should totally buy, I think it was CDPR before Cyberpunk 2077, and other people were saying, oh, you should buy Ubisoft before AC Red comes out, and you should do this and do that. But like, the thing with all of this is that these releases are already priced in. Like, if you think that you've like thought of something these investors haven't, you're just wrong. You know, all of these companies are priced with this stuff already like budgeted in. So Take-Two Interactive right now is priced according to the current expected value of GTA 6 when that drops. So like, even if GTA 6 releases and generates $7 billion in added revenue next year, that will still be considered a financial failure and the stock price will drop because Take-Two investors are expecting $9 billion. And this is why you can have, like, I think it was after Phantom Liberty, there were some YouTubers that were posting things like, well, there's no way to twist it. Phantom Liberty has been a financial disaster for Cyberpunk's developers over at CDPR because their stock price has dropped a lot. And it's like, bro, no. It can perform very well, but there are other things at play when it comes to stock prices and what these are valued at, you know? It's more complicated than that. Dylan, thank you for the $2 super chat. Now I have $999,999,998. You're welcome. Thank you. Well, Dylan's proved it, so now everybody's got to go buy the course. Yep. Everybody hop over to his Discord channel, and we have a financial expert in our midst. Yeah, wow. Dylan, you're right. Dylan made himself no longer a billionaire just for Luke. Yeah, wow. Yeah, narrative-driven stock perceivers. Yeah, the whole thing is just the stock market's very complicated. There's a lot of things going on at any given time. It's not as simple as just looking at one stat and being like, oh, wow, everything's failing. Like this right here. I mean, in the last, whatever this is, 5 days, Take-Two Interactive has dropped 4.2%, 420, dab. Is that because Take-Two Interactive is all of a sudden failing? Does this mean that GTA 6 is going to flop because investors don't believe it anymore? No. It's also because the broader markets have been struggling. The Dow tumbled 475 points. S&P 500 suffers worst day since January as inflation fears continue. Like, because inflation fears are pretty bad. The whatever consumer price index rose 3.5 points or whatever the other day, and so it freaked people out, and investors are super scared that everybody's going to stop spending money because inflation keeps growing. But like, this is just, you can't look at one stock's performance and therefore go, okay, well that means that whatever was roughly going on around this time is the pure cause for it. It's just not that simple. It just doesn't work like that. Oh yeah, the 1 year chart for Take-Two. Yeah, no, they've been doing better. 5 year chart up 62%. You'd hope, I mean, that they've been growing. You go back to like 2010, roughly $10 a share. Now they're at 147. So they've been doing good. Apple over 5 years. I mean, you can compare Take-Two to Apple. Apple's just rocking and rolling. Up 246% over the same period. Netflix has been all over the place though. I mean, Netflix for a while had lost money. You know, they were, for a bit there, they were down 50% on their starting point. Like, ugh. It's almost like when you invest in really solid, strong businesses, you'll get more returns than when you invest in struggling businesses. That's weird. Who would have thought? Oh, and then if we had the S&P 500, I can probably add. Yeah, the S&P 500, just the steady orange line. But you can see, it's much less volatile. It has a couple of dips, like right when COVID broke out, just like everything else. But in general, it just does its thing. Just chugging along. Oh, Disney. Do you want to just get depressed? Disney has been recovering a little bit since Bob Iger stepped in. But yeah, I mean, look at Disney. If you go back 5 years, they're down 13, almost 14% from 5 years ago. If you go back just a year, they've been recovering a little bit, but all time, I mean, you can see Disney, you know, back in the 80s, if you were to invest, you know, it doesn't really apply to Take-Two because they didn't start trading until 97. But compared to like the S&P 500, if you were to invest in the Walt Disney Company, you would have significantly more than if you just threw it in the S&P 500, you know, going all the way back to 84. But also back in 21, they were doing very, very well. And then they had a rough period. Thanks, Bob Chapek. Thanks a lot. Disney Plus has lost them a ton of money. Yeah, it just in general, they've had trouble getting any movies to be successful, and their Disney Plus thing has really struggled as well. It's just they've had trouble. But they're onto this new trend called gaming. Yeah. I think Bob Iger shutting down whatever Lucasfilm games and Disney games and all of those projects, I think that was a huge blunder, because he shut down so many games with so much potential and so many amazing studios back in like 2010, and just now is starting to be like, oh, well, maybe we should get back on that. And he's trying to license them, but now all of these big publishers are shutting that down. So they're not going to be able to do deals with like Ubisoft, EA. None of them want to do any Disney IP because Disney wants to take 30% of every sale. So they're like, yeah, we're just not going to do that. Sure ain't. He took my thing.